There's a new line going around that your 401k retirement plan has probably shrunk to the size of a 101k. Virtually no one has been immune from the problems in the nation's and the world's financial markets. The same is true of the people who manage New Mexico's investments. Charles Wollman of the State Investment Council joins us. Your latest report shows that the state's investment funds have taken a 30% hit over the past year. That's equal to about $11 billion.
Well, and that's definitely true. The report focuses in on the fourth quarter of the calendar year, and as you know, as everybody experienced, that was basically the worst investment quarter in history, and so the state permanent funds and its pensions definitely felt the effects of that market meltdown and that collapse. And right now we're looking at it's still pretty volatile out there, but we have seen a bit of a recovery in bits and spurts anyway.
Now, the numbers you have so far are through the end of December. We're now well into April. Any informal indication how things are going now?
We've actually gotten some numbers. Legislature keeps LFC pretty busy, so I think there was a bit of a delay in release of that report. We've seen numbers through March, and one of the things that hurt the permanent funds especially would be we have a conservative volatility reduction strategy where we hedge the portfolio when it comes to large cap and public equities. We hedge the market to try to reduce our losses when things are going poorly, and unfortunately that can also hurt you. It hurt us in December when the markets rallied. We had this hedge on, and that dinged us a little bit, and so that's why our numbers were not that good for the quarter. In January and February this year, however, that hedging strategy probably saved about roughly $230 million for the state. The permanent funds look to be down about 2% for the first quarter. That may not sound good, but relatively, I mean, S&P was down 11%. You had some international was down about 13%. Even the Russell 2500 value index was down 16%. So, the first quarter was continued a lot of the challenges for investors.
Well, I think that's the point, that you really haven't done any worse than the market has in general, maybe even a little bit better.
Again, if you can't take a look at these things on a quarter-by-quarter basis. Sometimes the strategies that you employ are going to perform better than other times. The hedging strategy that we have on is definitely helped us so far in 2009, and it unfortunately hurt us when we had it on in December. You remember October and November, the markets were pummeled, and unfortunately we did not have the hedging strategy on then, and the reason for that was actually we were playing it safe due to some counterparty risk. The agent that we used to employ that hedging strategy was Lehman Brothers, and we pulled out of the strategy because we were concerned about Lehman's status, and as it turned out, it was about a week or two before they ended up in trouble.
Well, it was interesting to note, too, that a small portion of the portfolio was invested with Bernie Madoff, but only, I'm doing the math in my head, 1/10 of 1%, maybe?
Maybe that. I'm not sure. I think overall the state through the permanent funds and through ERP had some exposure. Not losses yet, although we suspect recovery is not going to be significant there. It was in the neighborhood overall of $25 million, I think, and but that's why you diversify. You don't put all your eggs in one basket. It's in our hedge fund strategies, and overall we have exposure to about 400 different hedge funds. Two of them had small investments with Madoff's funds, And so, that would be our exposure there. Overall, it's a drop in the bucket. Do we like it? Or are we happy with that? No.
Well, but fortunately, it was a small amount, though.
It's a small amount, and there is potential recourse for us, either through legal avenues or through regular recovery means.
What's your reading on the film investments these days? How are they doing?
The film investments, it's an interesting program. I mean, it is definitely effective in helping attract film productions and television productions here to New Mexico. I mean, I think that nobody would argue that the film industry here is booming, and this kind of investment where we are not going to hit it out of the park with returns on it, but the principal is secured through a third-party guarantor, so the principal's not at risk. It helps create jobs in New Mexico. That is what the governor and the legislature intended when they created this program. And so, in that sense, it's been very successful.
And that is the good news, that the principal is not at risk.
We've made about $1 million overall in profit on that program, a little bit less, but we haven't lost a dime. And people need to remember that. We can't say that about a lot of the stock investments or bond investments that we've made.
And I can't say that either. Nor can you say that personally, I'm sure.
Oh, nope. It's rare when you find somebody who timed it right and got out. It's a difficult thing to do.
Charlie Woolman, many thanks.